Mr. Steigenberger, tell us what you think about the oil price and demand as well. We'll get to that in a second. But first of all, the oil price. Has it got as low as it can go?
Well, I think we certainly see the lowest oil price for the last 20 years, but it's not for the first time that oil hits such a low level. I would not go as far to say that's the lowest as it can get, but I would rather say it's pretty unclear if we see oil price rising again to a level that we were used to in the last 15 years. We have just been in a phase of very high oil prices in the last, let's say, 15 years. And that was attracting a lot of investment in new extraction technologies like fracking. And that led to the situation that today we are in a phase of oversupply, where we have a lot of supply in the market, and at the same time, the projections for demand were too high. So we have less demand than companies believed. And this naturally leads to a situation where we have a low oil price. Now, the big question is, what does that mean for the future? Mm-hmm. And my guess would be that we're rather seeing kind of continuation for different reasons. Happy to talk about that.
What are you talking about? A continuation of the phase, basically? So it could continue for the rest of the year? Is that what you're saying, or what are you getting at?
Well, I mean, if we look at the situation we are in, I mean, we have an oversupply in the current situation, in the current market. We know that resources in Saudi Arabia, Iran, United States, elsewhere, are lasting for a long time. We've been talking for kind of about the end of the fossil age for many decades. Yeah. This is not the case anymore. And that's what we learned in recent years, that due to new extraction technologies, et cetera, it seems that we have oil as well as coal and gas for many more decades. So that is not the problem. That will not cause higher prices. On the other hand, demand would be another reason to increase the prices, of course. But,
okay, and BP has said that demand could pick up at some stage soon, and that would drive prices back up. Do you agree?
Well, theoretically, that would be the case. But will we see increasing demand? And I would say for an entirely different reason, we won't. And that other reason is climate change. And we just saw at the Paris conference last year, and we saw earlier that year when at the G7, heads of states and governments decided that we basically have to end the age of fossils until the end of this century. So what we will see is economies will move away from fossil, move away from oil. That means that I would not agree with BP that we see significantly rising demand, which then would increase the prices. But I would rather say we probably see a long time of relatively low oil prices.
Okay, Mr. Steigenberger, we'll come back to you in a moment. First of all, a number of sectors are actually hoping for rising oil prices again. And here in Germany, one town in particular has an interest, Celle. Oil was extracted here in the 19th century, and although the wells are no longer spewing oil, the northern German town is a major producer for the oil industry. Highly specialized mechanical engineers produce everything oil companies need, from drill heads to rigs to training. As oil companies now cut back on projects, Celle is feeling the pinch. We paid a visit to a town in crisis.
An alarm goes off in the drill simulator. The crew tries to find out what's wrong. Is there a breach in the borehole? Everything's got to be checked.
We're going to flush the borehole to find out whether we've got a problem.
This is Europe's only school for master drillers. It's located in the German city of Celle, which is a big center for Germany's oil and gas industry. The first oil rigs were set up here in the 19th century. They started tearing them down about 50 years ago. All that's left now is the supply sector, which includes about 40 businesses. For example, Hartmann Valves and Wellheads. It specializes in drilling technology. All the parts the company makes are rigorously tested. They have to withstand a lot of heat, pressure, and weight. Up to 3,000 meters of conveyor pipe are connected to a single wellhead.
This is part of the wellhead. It's where the conveyor strands start. We hang about 150 to 200 tons off of this element. A truck weighs about 20 tons, so we have to be able to hang about 10 trucks from it.
Hartmann did about 25 million euros in turnover in 2015. That's a lot less than just a few years ago. One reason why is that the Russian market has been hit hard by a weak ruble, which makes German imports more expensive. In fact, a trade representative is here today to discuss the situation. The Russians need this equipment.
In some cases, you cannot do without such products on very severe conditions like Hartmann produces. So that's why, all the same, we have to turn to Hartmann. I'm saying Russia, not myself personally. So that's why we are trying to find new ways to bring the price down.
A weak ruble and international sanctions imposed on Russia are regional problems. Not so the global crash in oil prices. Nobody at Hartmann has lost their job yet, but that could soon change. Many production facilities just aren't profitable anymore.
The problem is that no one knows where oil prices are going to go now. Will they continue to fall?
Some 8,000 jobs in Celle depend on the oil and gas industry. Some businesses in this sector have cut jobs, including the German subsidiaries of U.S. corporations like Halliburton. We're not allowed to film here, but a member of the Works Council comes out to talk to us.
They cut 92 jobs. That's 40% of the workforce. We used to have 232 workers. It's pretty tough.
There are talks of a possible merger to cut costs. Halliburton wants to take over a competitor, Baker Hughes. It's not clear how that merger would affect workers here. Back at the school for master drillers. The candidates have come here for specialized training. Most already have many years of drilling experience in the oil industry. They're also feeling the effects of the drop in oil prices.
We used to have long-term contracts, 2 years, or if you were lucky, 5 years, with an option for 5 more. But those days are gone, thanks to the situation in this sector and to the drop in oil prices. So it's just a matter of luck whether you get a longer-term contract or have to scramble from job to job.
A lot of deep drilling projects are now on hold. They'll only be profitable if oil prices rise again.
So it's obvious the oil producers would like to see a better price for their oil, but it's also the competition, like green energy companies and renewables. Tell us how this balances out at the moment, because oil's getting cheaper and cheaper. Is that destroying business for the renewables?
That is basically the fear that we had when we looked a bit into this last year. And what you see is a kind of 2 different trends. One is that we observe in Germany that people start to install oil-based heating systems in their own houses again. That was a technology that was basically dying out for the last years, but it's coming back now, and that locks people into a 20 years dependency on oil, of course. So that's something which is, from a climate change perspective, a pretty negative trend. On the other hand, what we also observe is that on the global level, if we compare investments into the different technologies, we saw in the year 2015, that was the record year for investments into renewable energy. Wind and solar alone saw 121 gigawatt new capacity being installed. That's 50% more than Germany installed in the last 20 years. So that's a trend that has not been diminished due to the oil price. So it's both sides.
OK, well, that first trend, I mean, people are obviously then still thinking with their hip pocket and not as environmentally conscious, possibly, as we all thought. Or would you disagree?
Well, did we all think so? I mean, no, I mean, it's an obvious trend. I mean, it's obvious. People have always thought about the economics. Yeah. And I'm not blaming anyone. I mean, if there's a cheap opportunity for me to heat my own house, yeah. Obviously that's what people do.
Well, yes. Looking at the economics of it then, how realistic is this at the moment? What sort of balance does there need to be for renewables to really make it onto the global stage and make it big business-wise, and the cheap oil price at the moment?
Yeah, well, we see that few renewable technologies, namely wind and solar, have actually become so cheap that they're able to compete with fossil resources on the global scale. So we know that in good places, wind onshore and also solar photovoltaics are actually the cheapest electricity generation technologies in some places. And it's only a matter of a few more years that they will be actually significantly cheaper, and that even cheap oil prices are not going to change that broad picture. So in the long run, there's a pretty good chance that we will actually see an economic trend towards renewables. But on the other hand, and that's the example I just mentioned in Germany, that's not the case everywhere. And you need to talk, or we need to talk about political interventions in order to shift that balance in favor of renewables and not allow the old fossil industry to succeed anymore.
Okay, because Germany's invested quite a lot of money in renewables, hasn't it? Just yes or no, would you invest in renewables in the green sector yourself?
Yes, of course.
Yes, of course. Okay. Mr. Steigenberger, thank you very much for coming in. Interesting to talk to you.